everyone, welcome to another episode of the Mizuho Week Ahead. I am Jingyi, market economist at Mizuho Bank. The theme for the upcoming week is Growth Spotlight. Growth considerations arguably took the spotlight last week as US retail sales outperformance and lower initial jobless claims erased the declines in yields on the PPI downside surprise. Looking ahead, volatility may add at the margin, barring sharp surprises from second-tier activity data. Thus far, Fed officials' views on growth outlook have been a mixed bag, and markets will look to Jackson Hole, which starts on Thursday, where Fed Chair Powell will get to give his take on recent data. In particular, focus will be on any shifts in policy response function, as well as risk to jobs in the context of higher for longer beginning to bite. Meanwhile, last week, RBNZ's 25 basis point cut was motivated by growth concerns. Forecasts showed growth contraction in Q2 and Q3 2024, while inflation was broadly on track towards target. Nonetheless, RBNZ noted that policy will need to remain restrictive, with pace of further easing conditional on inflation. Over in EM Asia, BSP also cut its benchmark interest rate by 25 basis points, while noting that the economy would operate a negative output gap in the near term and expressing confidence in continued disinflationary path. BSP highlighted more easing forthcoming, with either a 25 basis point cut in October or December, but the possibility of 25 basis points cuts in Q4 may be more material than BSP has signaled, insofar as moderating inflation in coming months should afford room for easing in real rate terms, and this is bearing any domestic growth deterioration. This week, Thailand Q2 GDP growth should pick up, albeit still remaining below trend. Hospitality sector should aid services growth, while industrial production continued to be weighed down by declines in motor vehicle production. Notwithstanding this, growth on a moderate recovery path gives reason for Bank of Thailand to hold rates, while headline inflation is likely to creep up into the target range as the effects of higher diesel price cap feed through. Furthermore, a Bank of Thailand hold will also be an anchor of stability amid heightened political and policy uncertainty with the change of Prime Minister. This week as well, BI is expected to hold amid stable growth and moderating inflation. Despite a stronger rupiah since the last meeting, any easing by Bank Indonesia is unlikely to commence before the Fed, as FX volatility risk remains. Finally, Bank of Korea should hold as Korean won volatility risk remains, alongside rising house prices in Seoul and continued increase in mortgage debt. But Bank of Korea could flex scope of easing given the underlying disinflation is broadening within the CPI basket even as core inflation remains sticky. All in, with disinflationary trajectory largely on track, markets will be increasingly attuned to downside risk to growth or policy normalization hopes. With that, we have come to the end of the video. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.